Hello, hi there. Good afternoon, everybody. My name is Michael. I'm one of the business advisors that work here at Wenta, and I'll be hosting today's webinar, cash flow for your business, or cash flow forecasting for your business. So what I'm going to do is I'm just going to go over some housekeeping, if that's okay. All right. So this webinar will be recorded. Having your camera and microphone on is optional. However, the microphone will be muted by myself. Any questions, any queries, please make use of the chat box. I will check it sporadically as I am presenting. Any simple, quick, easy questions, queries, I can answer it within the webinar. Anything a bit more in depth, I would suggest that you book in a free session with one of our business advisors, and we can talk about it a lot more. This webinar is recorded. The link will be sent out to you after the webinar, not straight away, maybe a few days afterwards. Please do keep a lookout for it because it's only valid for another 48 hours once it has been sent out. You'll get a copy of the slide decks and any templates for this webinar. As this webinar is CPD certified after the webinar, okay, if you attend in full, you will get a certificate sent to you in due course. We're doing them in batches. It all depends on how many people have showed up for this webinar or the other webinars last week and sort of this week. It will eventually get sent out to yourselves there. Okay. Moving on. So I'm just going to do a quick introduction to myself, a quick introduction to Wenta as a business, and we delve into the ins and outs of the webinar. So a bit of background information about myself. I graduated with a degree in business and management all those many years ago now. Started off my career in accounts, doing year-end accounts for sole traders, for partnership, and for some limited companies. So that included cash bank reconciliation, VAT returns, self-assessment tax returns, and the general financial bookkeeping for a small business. I then went on to set up various businesses with my family and run that for a few years. I then became a credit officer, a finance officer, and a business advisor, working with potential entrepreneurs such as yourself in creating business plans, in creating cash flow forecasts, then submitting that business proposal for startup funding. Hopefully, once they were successful in obtaining startup funding, I also provided them with a mentoring service, just to make sure that they had access to the right information and guidance at that crucial stage of their business. So that brings it over to me now here at Wenta, where I am a business advisor. I'm pretty much doing the same thing I was doing previously as a business advisor. Wenta are a social enterprise, a non-profit organization. We're actually celebrating our 40th year this year. So we have two sides of the business. One is the sort of the core side of the business, the money-making side of the business. Any money, any profits that get generated from that side gets plowed back into the business to allow us to do the free side of things, which I'll talk about in a minute. Okay. So our core side is we either own or manage a few business centres in England. So we have one here in Enfield, one in Potters Bar, one in Watford, and one in Stevenage. So we rent out office units, office spaces, hot desking spaces to individuals and businesses alike. Okay. Any money get generated from the rental income goes back into the centre, doing up repairs, and allows us to do the free side of things. Okay. Other paid services that we offer are registered address service. So particularly useful for anybody wanting to set up a limited company, don't want to use their home address because all of that is made public as a registered address. For a small subscription fee, you can use our business address there. Okay. You get letters, parcels sent to our business address. We can let you know when to come pick up any letters, any parcels. We can even answer the phone in the name of your business. You can set up a mailbox here if you wish. We can give you a key. You can come and go as you please. And you can make use of some of the facilities that we have at the centre as well. Okay. We also offer something called savings. So we partner up with a number of organisations or a number of individuals. If you are successful in obtaining their products, their services via our website, they will give you some sort of discount, some sort of small benefit that you wouldn't normally be able to get if you went directly sort of to them. Okay, so we've got a nice little partnership with Dell. We've got a nice little partnership with Tide. We've got partnerships with social media consultants, with accountants, cybersecurity experts there. Okay, so please do look at our website. We also offer something called Action Zero. Okay, so this is a paid subscription service. Okay, it's a tiered paid subscription service. It's all about helping you to create a greener business overall, help you create greener products, greener sort of services there. Okay, so it starts off at the bronze level, which is for free, a bit of a taster of what to come. Okay, then you got to silver or gold subscriptions. Okay, and that is when you pay a subscription-based service per month there. For the price of a couple of coffees a week for the whole month, you'll get access to new information, new tools, new webinars about climate change, how it impacts the environment, and what you can do to become a greener business, okay? No matter what services or products that you are providing there. Okay, so if you're interested in any of those paid services, please do check out our website. So again, any money that is generated from that side is plowed back in to allow us to do the free side of things. So we offer free business advice, support, and guidance. So if you live next to or close to one of the centres, you can come in. We can arrange a little face-to-face with one of our business advisors. We can arrange a session by Zoom, as we are sort of doing now. Okay. Or we can organise a telephone call to talk about your business. If you have any questions, if you have any queries there. And we also work with other councils as well. We have projects, contracts with them. Okay, so that's pretty much sort of Wenta in a nutshell there. Again, interested in any of those services, products that we provide, paid or unpaid, please do check out our website here. Okay. So what I'm also going to do is I'm also going to turn off my camera, okay, because nobody wants to be staring at me for the next sort of 3 hours or so. Okay, so I'm just going to turn that off. As long as you can hear me and see the slides, that is the most important thing. Okay, so this webinar is scheduled to last for about 3 hours. Sorry, excuse me, I'm recovering from the flu and a slight little cough here, so please do bear with me this afternoon. So this webinar is scheduled to last for about 3 hours. I am aiming for a short 10-minute to 15-minute break on the, say, 45-minute mark or 50 mark, depending on how we sort of get along in there. Just give us a chance to stretch our legs out, grab a cup of coffee, cup of tea, and have a little go for a toilet break needed. Okay, again, any questions, any queries, please put it in the chat box. My simple question, I can answer it within the webinar. Anything a bit more in depth, I strongly suggest that you book in a free session with one of our business advisors there. Again, all our details can be found sort of online, email address, telephone number as well. Okay, so again, for those who's just joining us, done a quick introduction to myself, quick introduction to the company and that I work for. This is the cash flow planning webinar. Okay, and we'll just see how we sort of get along here. Okay, so as this is a CBD certified webinar, there are some learning objectives this afternoon. So hopefully by the end of this webinar, you should be able to show knowledge and understanding of cash flow forecasting, explain the relevance of cash flow management, apply the specific terms, theories, and concepts in assessing financial risks, keeping parties informed, and how to address any cash flow gaps, present a conclusion about invoice factoring and invoice discounting in relation to customer retention, select, evaluate, interpret, and use the information from the various sources out there to ensure that statutory compliances and best practice is always adhered to. Okay? So hopefully by the end of the webinar, we should be meeting all these objectives here. Okay? And how are we going to achieve that? So these are some of the topics that we're going to go over over the next sort of few hours this afternoon. Okay? So what I'm going to do is I'm going to read over this really quickly, and as we delve into the ins and outs of the webinar, we'll go into a lot more detail. And also, please check out our other free webinars that we have. Okay, some of them go hand in hand with this. So we have a business planning webinar, how to set up a small business. We have other webinars, finance and bookkeeping webinars there. Okay, so also, I'm not expecting everybody to have attended this webinar and know everything that there is to know about cash flow forecasting, cash flow. Okay, if it was that easy, literally everybody would be doing it. This is just to provide you a bit of guidance. Okay, so when you come to do it, you know exactly what to look out for. a lot of the learning actually comes from experience. Say, no matter how much training, how much webinars, how many books that you read, it's only when you conduct the business operation, it's only when you actually do the task of cash flow or cash flow forecasting is when the real learning sort of happens there. Okay, but hopefully during this webinar, we can provide you with that confidence, that guidance, tell you what to sort of look out for, and also what you learn with your own market research as well. Okay, so we're going to we're going to give you an overview of cash flow. Okay, we're going to talk about cash flow management, capital expenditure, working capital, sales forecasting, okay, which goes hand in hand with the cash flow forecasting as well. Okay, we're going to talk about expenditure, variable and fixed costs. We're going to talk about cash flow gaps, okay, and we're going to talk about actual and forecast analysis as well. So these are the topics that we're hoping to cover in the next sort of few hours or so. Okay. Okay, so first of all, okay, we're going to talk about cash flow forecasting. Okay, so the purpose of cash flow forecasting is to help you sort of, well, the definition is to help you sort of optimize liquidity, okay, available cash, okay, with the approach of projections of expected expenditure and of expected money coming into the business, okay. So it takes into consideration the timely manner in which money comes in and out of your business. Okay, doesn't matter if it's in your pocket, in the till, or in the bank. It takes into consideration the timely manner in which money comes into your business there, and that's important. Okay, so obviously we'll go through an example, and hopefully that will be explained a bit more. So when we talk about cash flow forecasting, it is the practice, is the art, in a sense, of estimating your business's future cash position. Money in, money out. Okay, so it is a snapshot in time. Okay, normally cash flow forecasting is done it's done on a monthly basis over a 12-month sort of period. Okay, some people break it down even more to the week, okay, to the day, even at times. When we're talking about cash flow forecasting, we're not talking about profitability, okay? People do profit and loss accounts for that. Again, that's just an estimation, okay? Cash flow forecast takes into consideration timely manner in which money comes in and out of the business. Do I have enough cash in the business to keep my business ticking over? Weekly, well, daily, weekly, monthly, or sort of yearly even, okay? So cash flow forecasting helps you to monitor that, helps you to manage that, and helps you to control cash through your business to a certain point as well. Okay, so obviously, anybody setting up a business, okay, you are always hopeful, okay, that money is coming into your business. Hopefully, there'll be more money coming into your business than going out of your business. Okay, hopefully, that is okay. But it all depends on your venture. It all depends on what stage you are in a particular business as well. You might require more outflows. Okay, there's going to be more outflows than there are inflows to the business. If that is the case, you need to plan for any eventuality, for example, which we're going to talk about when we go through the example of the cash flow there. And again, with cash flow forecasting, a lot of people, you know, when I discuss cash flow forecasting with them, okay, and as I help them create a cash flow forecast, they always say, you know, how am I supposed to predict the future? Okay? You know, I can't do that. We are not asking you to predict the future here. Okay, cash flow forecasting is based on your skills, your experience. It's based on your market research that you have done so far. Estimating income or sales in or money coming into your business, okay, and money coming out of your business there. Okay. If you haven't done a cash flow forecast, how do you know how successful the business is going to be? Okay, how do you know, okay, how much money is going to be coming in and out of your business? Okay, because cash flow also asks you, in a sense, to predict your sales based on best estimates, based on skills, experience, and market research that you have done. Okay, to be honest with you, I've also worked with a lot of people that don't do cash flow forecasting. They jump straight into it. Okay, I know it's going to be making money. I know I can bring enough money in to keep the business afloat there. Okay, that is fine. Again, that is a nice simple business. So I've worked with quite a few window cleaners, for example, not much outflows, okay, more money coming in if they can get the business, and that is, okay. I've worked with more complicated businesses, restaurants, takeaways, for example, marketing consultants, okay. With regards to marketing consultants, for example, they don't get paid every week, okay. They invoice every month, okay. So that will affect how much cash comes in and out of your business, okay. So you need to budget for all of that. Do you have enough money coming into the business in order to sustain my business until the next paycheck or until that next set of income there, okay? Just something to consider as we talk about cash flow and forecasting. So the definition of cash flow forecasting is the process of monitoring, analyzing, and optimizing the net amount of cash receipts minus your cash expenses. Cash receipts in money coming into your business minus cash expenses going out of your business. Okay, so net cash flow is really important to measure the financial health of any business. Okay, doesn't matter what industry that you're in, that is absolutely essential. Okay, poor cash flow, okay, is one of the primary causes of trading failure. Okay, so probably the latest example could be Wilco, the retailer. Okay, I think they went under in August of this year, a very well-known brand, okay. They were affected by cash flow issues, okay, along with other issues such as suppliers disruption, and for example, not have enough cash in the business to meet their financial obligations, supply chain issues, and for example, okay. Tesla, a good couple of years ago as well, okay. They ran into cash flow issues. They were spending more, okay, on their expenditure, doing the designs of their models, okay. The money was coming in, that they could collect money. They had to go out and raise extra finance through the various means, okay. Borrow money, sell more sort of shares, just to keep them sort of going, okay. So again, cash flow forecast takes into consideration the timely manner in which money comes in and out of your business. Okay, it's very, very important. You need to have enough money in the business to meet your financial obligations. Otherwise, it is game over, unfortunately, there. Okay, so again, that is just one primary reasons of failure of a business, as well as other things such as, well, not bringing enough money in, supply chain issues, like I said, and any other sort of factors as well, time or whatever it may be. Okay, so we're going to go through an example of a cash flow forecast now. Okay, we're going to discuss some trends, for example, tell you what to look out for example. Okay, again, the guidance can be fitted into pretty much any sort of industry, but I do recognize and do understand every business, every circumstances are sort of different. So we're going to give you that general overview of it. So this is what a cash flow forecast sort of looks like, really, a very sort of basic one. There are templates out there. So you can download templates from our website, go to the Wenta website, in the search box, type in cash flow forecast template. I'm not too sure if anybody has heard of Startup Loans Company. So Startup Loans Company are a subsidiary of the British Business Bank, which is owned by the UK government, but independently sort of run. They have cash flow forecast templates that you can download for free as well. You don't need to sign up for anything. Same with our one. You just download it from the website. Their one is a bit more detailed, a bit more in depth. They have separate tabs. Our one is just one sort of single tab there. So again, I'm just going to go over a few trends, give you a bit of an outline, sort of what to look out for. So this is a cake making business. Okay, this is a sole trader cake making business. Okay, you have something called the pre-start column, which I'll come back in a minute. Okay, this is over a 12-month period. Okay, so January to December. Yours doesn't have to start from January and end in December. It all depends on when you set up your business. So that could simply be February starting, okay, and then afterwards that'll be sort of January end. Okay, so you've got the months on top, then you've got your total columns here. Okay, Any template that you download for a cash flow forecast will be heavily formulated. Okay, so where possible, try not mess around with any of the formulas, depending on your confidence levels, but depending on your comfortability with it, okay, and your knowledge on it. Okay, so generally the total columns here, okay, these are all formulated. Okay, totals here, total columns, that is formulated, same as here. These bits are formulated, okay, and all of this is formulated as well, the last sort of 3 rows or so. Okay, so generally the cash flow forecast can be divided into 3 sections. Okay. Okay, thank you. Okay, thank you for your comments there. Thank you. Okay. So I'm just trying to bring up the laser so everybody can see it. Okay. So this can be divided into part 1, part 2, part 3 in a sense. Okay, so part 1 here, the top bit, is money coming into your business. Okay, we're not just talking about sales. Okay, we're talking about any money coming into your business. Okay, so this is a cake making business. This is for a sole trader. This business has 2 revenue streams. Okay, so we've got something called cakes to trade here and celebration cakes. Cakes to trade are cakes that this business sells to other businesses, such as restaurants, cafes, mobile shops, even mobile trucks. Okay, they sell to those businesses, and those businesses sell to their customers, sell to their clients there. So in a sense, you're acting as sort of a wholesaler. Okay, celebration cakes are cakes that I sell on a daily basis to my clients, to my customers that pay me sort of straight away. Okay, so I've got 2 revenue streams here. So obviously your business might have multiple revenue streams. Okay, what you can do, you can open up new roles here. Okay, open up a new role, open up 2 or 3 roles, for example, and list your revenue streams. Okay, but if you are doing that, making sure that the total columns here, okay, that you replicate any formulas, so take into consideration any alterations. Okay, so let's just say, for example, I am a restaurant, okay, or I'm a takeaway. My revenue streams are my food that I sell. Okay, so I might have 5 starters, 20 main dishes, 6 desserts, set menus, and drinks, alcohols, and soft drinks and juices that I sell. Okay, so obviously I'm not going to be listing every single starter, every single main, every single dessert, every single alcoholic drink. Okay, I'm going to categorize them. Okay, because if you don't categorize them, you have literally a row, hundreds of rows, and you don't want that. Okay, so I'll categorize them. Category A, starters. Category B, mains. Category C, desserts. Category D, set menus. Category E, alcohol and soft drinks then. Okay, now I'm taking an average. Again, this is an average, an estimation of possible sales money coming into your business. Okay, so again, these are my 2 revenue streams because this is a cake making business. You can adapt it to suit your own needs depending on what venture that you are, but try not to add too many roles in. Okay, capital introduce. Okay, £1,000 here. Okay, so capital introduce could be money that you have put into the business. Okay, £1,000, or it could be a combination of assets you're introducing into the business as well. So let's just say, for argument's sake, this £1,000 capital introduced. Okay, £1,000, 500 of it is actually made up of cash. Okay, 500, the other 500 is actually made up of assets that are worth £500, but I'm introducing into the business. Okay, so that £500, £200 could be a computer, £50 could be a printer, and the rest some other bits and pieces there. Okay, other money coming into your business could be other, which is loan, a grant, 1,600. Okay, so that could be I've gone out, I've got a loan from Startup Loans Company. I've gone out, I've borrowed from friends and family, for example. Okay, don't be afraid to change the description, add a few roles if sort of needed there, but don't go over the top. Okay, so that's, again, top part is money coming into your business. Okay, obviously there's this that total role here, which is sort of formulated. Okay, the middle part here it's expenditure or money going out of your business that affects the amount of money that you have in your bank, in your till, in your pocket. There. Okay. So again, the worksheet will give you descriptions, okay, of this expenditure of money coming out of your business. Okay. You can change the descriptions. You can add in new roles if you want to better suit your needs. Okay. But again, if you are adding those roles in, okay, here, okay, making sure that the total columns, okay, the formulas are carried over to take in consideration any alterations. Okay. And the last part is what money you have left over at the end of each month. Okay. So we'll talk about this a little bit more. Just say here, okay, it's simply money coming in your business minus money coming out of your business. What is left over, that is carried forward into your opening balance for January. Okay. So again, we'll talk about this a lot more in detail as we discuss this. Okay. So again, so part one, well, yeah, part one, part two, sort of part three. Part one, money coming in. Part two, money coming out. Part three, money left over and carry forward onto the subsequent sort of months there. Okay. So let's start off with the first column here. Pre-start. Oh, well, it says pre-start income, pre-start expenses here. I like to call this pre-start column. Okay, it takes into consideration the whole thing. Okay. So for any new business setting up or launching, okay, it's more than likely, A, you'll introduce some of your own money into it, i.e. that £1,000 worth of assets, money, and you need to go out and raise finance there, okay? You need to record it in the pre-start column, even before I've got set up, okay? How much realistically can I go out and raise in order to launch this business? And you should have some idea of how much it actually, how much your business will involve in actually setting it up. So again, I am trying to open up a shop selling clothing. Okay, through my market research, I have budgeted 100,000 for opening to stock the shelves, for example. Okay, I need to go out and raise £100,000. Okay, through saving, through friends and family, through a loan, through grant. Okay, through investment, through angel investors, whoever it may be from. Okay, so again, money that you have raised or you're introducing into the business, okay, or assets you're introducing into the business in order to set up this business, in order to launch this business. Okay. On the pre-start column, expenses, money going out of your business. So as this is a cake making business, okay, I'll need to go out, and I'm estimating this is, I'll need to go out, I need to spend £100 on material, stock, and ingredients. Obviously, I'm a cake making business, that would be ingredients. Okay. It makes sense. I will need to go out, make the cake, pay for the ingredients, produce the cakes, so I can sell to my customers, so I can sell to my clients there. Okay, I need to have merchandise on the shelves in order to sell. So from day one of trading, people come into my shop, maybe people buy from me online. They can buy it there and then, or I can ship it out to them, depending on what sort of business that you are. Okay, so I'm estimating I need to spend £100 on the ingredients to make the cakes. Okay, I've also estimated that I need £200 for cake equipment. So this £200 could be new equipment that I've gone out and bought, or it could be existing equipment that I have that I'm introducing into the business. Okay, so if that is the case, so for example, this £200 here, £100 could be new cake equipment, £100 could be existing cake equipment that I had that I'm introducing into the business. Okay, so obviously that £100 that you're introducing into the business in terms of assets, that will form part of your capital introduced. So at this £1,000, £100 of it would be those assets that you introduce into the business for the cake, for example. Okay, gas and electricity, I've not paid anything yet. A bill hasn't come. A demand for payment hasn't come yet. Therefore, I don't pay anything. Okay, £200, £240 for insurance. Okay, so this all depends on when you pay insurance. Some people prefer to pay insurance up front, as with this example. Okay, if I have paid insurance up front, therefore I have incurred a cost, okay, before I've started to trade. Therefore, I record it as my pre-start trading expenses there. However, if you have decided to pay your insurance over a 12-month period, Okay, so your monthly payment for insurance will be £10 a month. Okay, you will need to then put it as £10 per month because that is when money leaves your business. So I've decided for this example, I have paid it all up front. Okay, it might because it's cheaper if I pay it all up front. I don't need to worry about it for the rest of the year. If I have decided to spread it over 12 months, okay, it might be a bit more dearer. Okay, even though the monthly repayments will be lower, maybe. Okay, £100 for postage and stationery, pens, papers, order notes. Okay, I've gone out, I've spent £100, or I'm estimating I'll need to spend £100. Again, all an estimation. Okay, food hygiene certificate. I've done my market research. It will cost me £100 for a 2-hour course online in order for me to get my food hygiene certificate, in order for me to run my business. Okay, it all depends on what type of business that you are as well. Okay, if I'm a I don't know, an electrician, a gas man, myself, okay, I'll need to go out, get the relevant licenses, get the relevant sort of qualifications, maybe. Okay. £200 for traveling and motor expenses. That could be supply runs that I've done. That could be I put in £50 or £200 so far into the tank. Okay, so from day one of trading, I'm already ready to go. I can do deliveries. Okay, £150 for advertising and promotion. It actually makes sense. I don't suddenly open up my business and say, "Hey, everybody, I am now open. Please come and buy something off me." You do a soft launch. You do a bit of advertising, a bit of marketing before you open your doors, okay, online or as a premises to say, "I am opening soon." So on opening day, you have customers already, hopefully. It's a bit like looking at a shop opening. Okay, obviously, as you walk past the high street, the shop says coming soon, coming soon, coming soon, and there. Okay, and then obviously when they open, big banners, flowers everywhere. Okay, it's actually an event. Okay, people do. I don't know. A while back there was a German doner that actually opened near me, and they put it out on social media. The first 100 clients, okay, get their meal, okay, if they buy a single meal, okay, for £1, for example. That was a bit of promotion, okay, sales, advertising, marketing. Obviously, you don't have to do that, okay, but you need to let people know beforehand that I am opening, coming soon. You don't suddenly just open up your doors and surprise everybody. Okay, £500 for computer expenses. Okay, again, this could be a brand new computer that I've gone out and bought. Okay, or this could be an existing computer that I have that I'm introducing into the business. So again, this computer is worth £500. Capital introduced £1,000. £500 of that is related to this computer expense there. Okay, so again, in the pre-start column, I've gone out, I have raised 2,600 because that is what I'm estimating in order to launch my business, what I need to launch my business. Okay, pre-start expenses equals 1,590 in expenses that I will incur before day one of trading. Okay, so I've gone out, raised 2,600 minus my expenses, 1,590. I am left in my pocket, in the till, in the bank, £1,010. Okay, so that £1,010 will be my opening balance from the 1st of January, or my first day of trading there. So that's balance brought forward. And again, these are heavily formulated. Yeah. Okay, so moving on to January now, for example. Okay, the top bit here, cakes to trade, 0. Okay, the reason why it is 0 is because those cakes to trade, I am selling to those restaurants, to those cafes, to those mobile food trucks, wherever it may be, okay, or even customers, even, okay, if I trust them, okay? The day-to-day customers, and that is, okay. I am allowing them to take control of the goods now, or the services now, okay. I'm allowing them to pay me in 60 days' time. Okay? That is something I have worked out with them, okay. So even though they may have taken control of the goods now or used my services now, depending on what sort of business that you are, okay, I will invoice them at the end of the month, okay, but in this example, at the end of 60 days, sort of 2 months, okay. And how you invoice them will severely affect your cash flow, how much money you've got coming into the business. Okay, so only do what is affordable. I am estimating this is affordable to my business. I'm to encourage new business. I'm allowing them to pay me in 2 months' time, okay, because I have forecasted that is viable. Okay, obviously you will need to do the same thing. If 60 days is too long, cut it down to a month, cut it down to sort of 2 weeks there. Okay, so I've not been paid for those goods or services yet. Therefore, I don't record it as part of money coming into my business. Okay, only when I get paid, which is hopefully after 2 months, then I will record it. Okay, so for January and February, I've not been paid, even though they have taken control of the goods. Therefore, my income for that particular sales revenue is 0. Okay, celebration cakes. Okay, cakes that I sell to my customers on a daily basis, which I get money from there and then. Okay, that could be in a shop coming through the till, they buy cakes off me, they pay there. Okay, it could be bank transfer, credit card, whatever it may be, but I get paid there and then. Okay, celebration cakes, I am estimating to be £335 for the opening month. So again, the worksheet, income into your business, or sales, or money, or capital introduced, whatever it may be. January, money coming into my business is £335. Okay. For expenditure, you're pretty much doing the same thing, estimating, okay, what are my expenses going to be for this month? Okay. So marked for material, stock and ingredients, £70. Okay, makes sense. Initially, I've spent £100. However, I've made those cakes already. Those are sold. I will sell cakes as they leave my shelf, as they leave my storeroom. I'll need to go out, buy more ingredients to produce more cakes to sell to other clients and customers. And I'm estimating at £70 for this month. Okay, so £7 for some cake equipment, some wear and tear, replacements, whatever it may be. Okay, gas and electricity, I've not paid it yet. Okay, my gas and electricity comes every 3 months. Okay, even though I have used all that gas and electricity, a payment, a bill hasn't come yet, I don't need to pay yet. I only put it down as an outgoing, as an expenditure when I'm expected to pay. Okay. Same with insurance. Insurance I paid up front already. I don't need to worry about for the next sort of 12 months. No money is coming out of my business for the next 12 months for insurance. Therefore, it is 0 until my new bill comes after 12 months. Okay. Postage and stationery, £7. Again, pads. I've got a lot of customers. I've written all over it now. I need new pads. I've run out of pens, whatever it may be. Envelopes. Okay. Food hygiene. I don't need a food hygiene certificate every month. Okay, I've done it. Okay, it's valid for another 6 months. It's valid for another year. It's valid for 2 years. In 2 years' time, I'll then need to get an updated one. So £200. I am estimating £200 per month for traveling and motor expenses. Okay, telephone is different. I need to pay up front. Okay, therefore a bill has come from my telephone operator, £60. Therefore, I need to sort of pay it there. Okay, and every 3 months I pay up front. Okay, because that £60 covers me for the next sort of 3 months. Okay, £10 for a bit of advertising promotion. That could be new flyers, new business cards, advertising online, for example. Okay, hosting fees for the website. You might want to add in a new role. Name it website cost, domain name cost, web hosting cost, for example. Okay. Personal drawings, and this is really important. Okay, personal drawings isn't an allowable business expense. Okay, personal drawings are what you'll be taking out of the business to finance your personal needs. Okay, so in a sense, it's your wages. Okay, even though it can't be put down as a business expense. Okay, an allowable business expense. However, you're taking £500 out of the business for yourself because you've got personal rent. You've got mortgage to pay, you've got personal food to pay, you've got personal gas, water, electricity that's not related to the business. You like to go on holidays, you like to put money in savings, you've got Netflix, you've got Sky, you've got a mobile phone you need to pay for. Okay, so I'm taking what is affordable to the business. Okay, I'm estimating that I can take £500 out of the business, and £500 is enough to finance my personal expenses. Okay, so it's got to be those two things. It's got to be affordable to the business. Okay, and you've got to be able to survive on what you're taking out of the business. Okay, so the worksheet works out for you how much in terms of expense outflows of your business for that month. Okay, so for January, it is £854. Okay, so you've got your income for the not income money coming into your business at 335 minus outgoings for your business 854. You are left with minus 519. Okay, so obviously your outgoings is a lot more than your inflows to your business. That is actually fine. For this example, it is anyway. Do you know why? Because don't forget, at the pre-start, I've raised 2,600. I have spent 1,590. Okay, I have got £1,010 left over. That will be my opening balance for January. So on the 1st of January, okay, I've got £1,010. Okay, I'm in deficit here, but after taking into consideration the deficit, I've still got £491 at the end of the month. So I'm all good. Okay, to a certain extent, which we'll talk about in a minute or so. So receipts less payment, this row here, okay, at least for the January all the way up to 12, all the way up to December, you can see negative figures here every now and again, as long as overall here you are not in negative. Okay, if you are in negative, that suggests that your business isn't very viable. There's more money coming in, more money coming out of your business than there is money coming into your business. Okay, again, you can see negative figures here. Okay, as long as overall you are not in negative, i.e. here. Okay. On the other hand, here, opening and closing balances, bank, it says, you should not see any negative figures here. If you do see any negative figures here, you will run into cash flow issues. This isn't going to be a viable business. You will run into cash flow problems. Okay. If you do find, once you're forecasting, you do find doing negative figures here, okay, then you need to address the figures on here, and you need to address the figures here. Okay, maybe I've overestimated certain sales. Same with your expenditure as well. Okay, but I'll come back to that in a minute. Okay, so for January, I am left with £491. That will be my opening balance for February. Okay, so again, you're pretty much doing this for the same thing in terms of estimating your sales, estimating your outgoings for the business. Okay, so come back to the sales up here, cakes to trade. February, I've still not been paid. Again, I'm allowing them to take control of the goods now. 2 months' time, then you pay me. Okay, I'm not recorded anything. January, celebration cakes, I have sold to my clients and customers. I get my money there and then. Okay, so again, you're pretty much doing the same thing. So February is the same figures, more or less, for January in terms of inflows to your business and outflows. There's only, what was it, £60 difference or so. That's because my telephone bill, okay, I paid up front. Okay, I don't need to pay for another 3 months there. Okay, so again, you're pretty much estimating your sales, okay, and expenditure. So February is important. Okay, suddenly I've got £300 in from Kicks to Trade. Hopefully they have paid me. Okay, payment is due. I have sent an invoice out. I have sent reminders out. Please, payment is due now. Remember to pay me on this day by cash, by bank transfer, whatever it may be. Okay, once they pay me, I will give them a receipt. Okay, hopefully I have been paid by them. I have now suddenly got £300 worth of business in. Okay, I record it as inflows to my business in March because that is when I'm expected to be paid. Okay, £600 for celebration cakes. Okay, you can probably see there's a difference. £600 in March compared to January and February, where it's 335. Okay, when I first opened up my business, I'm actually expecting low sales, to be honest with you. Okay, word of mouth haven't quite spread yet. Maybe that footfall hasn't sort of come through yet, wherever it may be. Okay, however, March is when all the advertising I've been doing online as well kicks in. People hear about me more. People buy something off me a lot more. Okay, therefore I have increased my sales estimates. Okay, you can do that. Okay, so you can see probably in February, April, £900. Okay, May, £1,000 I'm estimating. Okay, June, 1,200 for the celebration cakes. Okay, or just say overall here, you can see a steady increase of sales. Okay, up until August, and then it drops to 1,700 from 2,500. It drops even further in October, 1,100. Okay, same in November before it goes up again in December, 1,400. Your business industry will have ups and downs. Okay, every industry has it. Okay, if I was an ice cream man fan, okay, I would expect to make all my money in the June and July period, or maybe a bit of August, maybe. Okay, that is my peak season. Okay, I would actually expect to earn nothing in the autumn, okay, in the winter periods, until I get set up again in June, July for my busy periods. Hopefully, I would have generated enough cash flow, controlled my expenses to keep me going until I'm shut up for the winter, and then restart again, okay, in the spring, in the summer. Okay, your business would do the same. You have ups and downs. Okay, I've seen a lot of sales where they just say, okay, I'm earning £1,000 per month for the next sort of 12 months. Okay, to me, okay, that might be the case for your business, but to me, that is a bit lazy. That's lazy cash flow forecasting. No business will have a fixed amount of income for the next 12 months. Okay, this might be true if I'm a marketing consultant. I have got one retainer. This retainer pays me £1,000 per month, fixed for 12 months. Okay, but then again, if that is the case, I will question the viability of your business. What happens if you lose that customer and client? You no longer have that £1,000 coming in. Okay, you're totally reliant on them. Okay, you need to go out, you need to generate more sales, but then it will be a bit too late, really. Okay? So again, you will have ups and downs. Okay, you will. That's just not just all about sales as well. If you have discovered any cash flow issues here, okay, you need to go out and raise more finance, borrow more money from friends and family, introduce your own money into the business, whatever it may be. Okay, and again, expenditure, money coming out, you're pretty much doing the same thing. So gas and electricity, every 3 months, a bill comes, a quarter comes, a bill comes, I pay for it. Therefore, that is when I record it as outflows for my business. Okay, so gas and electricity, 3 months, 1 quarter, I pay. 3 months again, I pay. 3 months again, I pay. There. Okay. So again, same with your stock and materials. Generally, as your outputs increases, so if I'm selling more cakes, for example, I'm selling more goods. Therefore, I need to go out and purchase more stock ingredients in order to make those cakes. So generally, this is a variable cost in a sense. It goes up and down depending on my level of activity, depending on my outputs for the business. Okay, so you've got to take that into consideration as well. Okay, so again, predicting your income, your expenditure, ensuring that you've got enough cash flow at the bottom here. Got to be careful with cash flow. Even though for this example, I'm in positive figure for my closing balances here. Okay, as you can see here on February and March, I've got low working capital, £32 at the end of February. Even though I'm in positive, okay, so let's just say, for example, okay, that's fine. You might think that's fine. At the end of February, I've got £32. Don't forget that what you're left over with is £32. That is your opening balance for March, okay? However, on the 1st of March, you've got £32 opening, okay? However, on the 1st of March, you might need to pay your stock and ingredients, for example. Therefore, already you're in negative, okay? So sometimes you've got to look at it that way, okay? Making sure you've got sufficient working capital. Where possible, okay, and I understand this is not always possible, you should be trying to keep a balance, okay, opening and closing balance of at least 3 months worth of working capital, okay? How do you know what 3 months worth of working capital is? Just say for argument's sake, your total expenditure for the whole year is £12,000, just to make it easier for everybody, okay? You are spending £1,000 per month outgoings, okay? Therefore, you need to have £3,000, okay, as your opening and closing cash balances where possible. Okay, that's what you should be aiming for. Okay, this was very much evident during sort of COVID. Okay, obviously no one knew sort of COVID would last sort of for so long. Some people have reserves, especially the multi-billion-dollar corporations. Some of them did, some of them didn't. Primark was a classic example of this. They shut up all their shops. They didn't have an online presence. They were shut until they could open again. They had sufficient working capital there. Okay, so that's what you should be sort of aiming for. But this is pretty much what a cash flow forecast sort of looks like. Really, again, just estimating. Okay, If you do feel like you have negative cash flow here, I need to go out, raise more finance, get more loans in, for example. Maybe I cut back on certain expenses. For example, do I need to spend £6,000 on this new cooker? Maybe I don't. Okay, maybe I can postpone that a few months later once I've got a bit more working capital saved up there at the bottom. Okay, have I overestimated myself? Same with expenditure as well. There. Okay, so again, this is pretty much what a cash flow forecast looks like. Take a step back, see if any adjustments need to be made. Don't fudge the numbers. Okay, otherwise there's absolutely no point of you sort of doing this here. Okay. I've sort of ranted on a bit. Apologies. It is now what is it? 1:50. If it's okay, everybody, I'd like to take a short 10-minute break here. Okay. Again, stretch our legs out, go for a cup of coffee, cup of tea, go for a little toilet break. Okay. If I can see everybody back at 10 minutes, please, if that's okay. Or 1 minute past 2, if that's okay with everybody. Just leave your computer. I'll jump back on there and I'll start the middle part of the webinar there. Okay. Cheers, everybody. Thank you. Hello, everybody. Welcome back. Hopefully, everybody is back. What we're going to do is we're just going to go into the middle part of the webinar now. Again, another 45 minutes, another 15 minutes, depending on how we get along. Aim for that 10 to 15-minute break there. So we've just talked about cash flow forecast. Again, don't be afraid to start plugging in the numbers. Okay, taking a step back, looking at it. Is my working capital, are my sales realistic? Is my expenditure realistic? Do I need to move any figures around the place? Okay, again, if I run into cash flow issues, okay, just say in July, I need to go out here, introduce more money into the business, get a loan where possible, whatever's out there. You're planning for the future. Okay, getting an overdraft in August, that is planning for the future. Okay. Hopefully, you can get an overdraft if you obviously you do it on market research. Okay, I can get an overdraft around that time. Okay, I'm 6 months worth of trading. I can take that trading to the bank and say, I need an overdraft now. Okay, generally it is about 6 months, but that's not a rule of thumb. Again, that is planning. Okay, so again, don't be afraid. If you do mess up any formulas, just download another copy, start plugging it in again. Don't repeat the same mistakes again there. Okay, so you're taking a step back, trying to figure out, is my business viable, okay, over the next sort of 12 months? Do I have enough inflows into the business in order to cover my outgoings for the business so I can keep going month in, month out, my financial obligations there? Okay. Over in this slide, I'm going to talk a bit about capital expenditure. Okay, and this is really, really important. Okay. So when we talk about capital expenditure, we're talking about sort of equipment, machinery, okay? That includes a vehicle as well, okay? Sort of an asset in a sense, okay? We're not talking about material, stock, or any other forms of direct costs, okay, i.e. cost of sales. These items generally lose value over time, okay? What price you expect to paid for it now or achieved now is not what it will be sold a few years down the line. Okay, so we're talking about sort of depreciation on these capital expenditure sort of items. Okay, so well, classic example is a car. Really, you buy a brand new car, say 30,000. Okay, they say as soon as you drive it off the outside of the dealership, 20% off straight away. It's depreciated by 20%. Okay, that car will have wear and tear on it. Okay, year in, year out. Okay, therefore, you will reduce this capital item, okay, by 18% each year, okay, until it disappears off your records there, until it holds no value anymore. Okay, there are certain allowances that you can claim back as well, okay, to help you mitigate this decrease, okay, or this depreciation. Please check out the HMRC rates and allowance website, okay, on www.gov.uk. Okay, it all depends on what tax year that you're in. So some of the tax allowances that you might be entitled to is something called the AIA, okay, annual investment allowance. I think, don't quote me on this, because I'm not an accountant, I'm not a financial advisor. It's anything up to £2,000 in terms of capital expenditure that you can claim up to, and that is an allowance there. Okay, written down value is that sort of depreciation. Okay, is a so for example, that car might be worth 10,000. Okay, I depreciate it by 18%. Okay, once I depreciate it by 18%, that's my written down value. What is it worth? Okay, year in, year out as I depreciate it. Okay, capital expenditure is really, really important. Okay, capital expenditure will hopefully help you with sales, help you with output in a sense. So again, let's just say I am I'm a restaurant. Okay, my capital expenditure could be, I'm going to go out if this is affordable to the business, and you may need a budget for it, and the cash flow helps, obviously. 7 months in to my business, okay, I want to go out and spend £8,000 on a gas cooker that has 6 gas hobs. My existing one was a cheap I just bought just to get me set up. It's always breaking down. It only has 4 gas hobs. Business is improving. Okay, I'm bringing a lot more customers in now. Okay, I now need to go out and spend that 5,000, 8,000 on that 6 gas hob. I can produce more goods. Okay, I can produce more meals, get them out quicker, service a lot more clients and customers, therefore earn a bit more money in terms of sales, hopefully. Okay, obviously, as I buy that item in 6,000, depreciate by 18,000, 18% per year. Okay, and in X amount of years, it will disappear off. It was lost its value. It's too old, for example. I need to go out and buy a new one. Okay, or I could be a marketing consultant, for example. I've gone out, I spent £2,500 on an Apple Mac. Okay, that has allowed me, okay, to produce a high quality of designs. Okay, marketing campaigns. Obviously, as with a computer, every year the demand of a computer get more and more. New software coming out, new updates coming out, for example, new devices that I need to attach. Okay, I'm producing bigger files, bigger folders, taking on bigger projects. Okay, I won't have enough RAM. I won't have enough processing power in 5 years' time. Therefore, I'll depreciate that Apple Mac by 18%, maybe. Okay, and then after 5 years, it disappears. Okay, until I need to go out and buy a new one. Okay, so again, capital expenditure is really, really important in terms of expanding your business operations where possible, if affordable, and claiming back the allowances, the depreciation of it. Okay, that will in turn help you reduce your tax liabilities. Okay, again, please do your own research on the HMRC rates and allowances website. There. Okay, anybody lucky enough to have an accountant, anybody lucky enough to have enough a bookkeeper, they will do that for you. They will take that into consideration when they do your account or if they do your tax return for yourself there. Okay, don't be afraid to source discounts, get better terms as well. Okay, some people do match, not funding. What is it? Just say if I go to Curry's, I take to them, look, this is a similar computer. Okay, for £500, you're selling it for £560. Can you match it? Okay, sometimes they say yes, sometimes they say no. Some of them have criteria. We can't compete with online businesses. You know, we can't match funding there. Okay, we can't match pricing. Sorry. Okay, that's it. Match pricing. Okay. So again, don't be afraid to shop around. Don't always go for the cheapest one. Go for the one that gives you the best bang for your buck. In a sense, one might offer 1 year's warranty. One might offer 2 years warranty. Okay. If the money in terms of pricing is not that much difficult, okay, or not that much in difference, and it's affordable, get the one with 2-year warranty, maybe, but that is down to yourself there. Okay? So we spoke a bit about working capital already. It's actually essential to the success of your business. Okay, the working capital, okay, the money that allows your venture, your business, your operation, okay, to function. Without sufficient working capital, okay, money in your pocket, money in the till, money in your bank, okay, you will not have a viable business. You cannot meet your financial obligations on a day-to-day, weekly, monthly, yearly basis, whatever it may be. Okay, so like I said, try to aim for at least 2 to 3 months worth of overheads or outgoings for your business there. Okay, on average. Okay, obviously you can't plan for every eventuality, but as you do the cash flow forecast, like I said, if over the 12 months, just for easy comparison, £12,000, £1,000 per month for outgoings, you should have at least £3,000. Okay, in your bank, in your till, in your pocket there. Okay, for your opening and closing balances. Okay, so there are formulas to work out working capital. Okay, so the technical version of it, okay, is evaluating your working capital into the extent in which your current assets, which can be described as assets that can be readily turned into cash, exceed your current liabilities, okay, which are sort of costs that are paid generally within the 1 year sort of period. Okay, so current assets, obviously it depends on what industry that you're in. My cakes, that's an asset that I can sell. I can get money on a daily basis, for example. Current liability, outgoings, okay, gas, water, electricity, I need to pay in 3 months or every sort of quarter, for example. Any other debts that I need to pay, loan repayments that I need to pay. Generally, they're payable within sort of within a 1 year period on a monthly basis. Okay, so some working capital is derived from sort of your profit. Okay, sometimes that in order to finance capital expenditure, in order to finance sufficient working amounts of capital, Okay, you might need to go out, borrow more money through loans. You might need to go out and start selling shares in your business, equity, maybe getting more investment in. Okay, hopefully your business on a daily basis, weekly basis, monthly basis is generating enough cash to meet your financial obligations. Okay, or maybe you've saved up enough. Okay, you have enough working capital. Okay, and that can finance your expansion, for example. Okay, to be honest with you, there's no point in you holding too much cash in the business. Okay, if you're a sole trader, if you're self-employed. Okay, you need to spend it wisely. Okay, in terms of, well, maybe taking more money out for yourself because it's affordable to the business. Instead of taking £500 out of the business, maybe you take £1,500 out of the business. Okay, that reflects how good the business is at the moment. That it can afford for you to take out £1,500 per month. Okay, or again, know when to spend it. I need to spend that £8,000 on that 6-cylinder gas hob cooker. Okay, I can make more money. I can service more clients, get more meals out. Okay, again, buy an Apple Mac, design better quality products. I can charge more now, maybe. Okay, so anything within reason there, but you need to take that into consideration when considering working capital. Again, how do you finance expansion of your business? Okay, I've got a store now. I want to open up another one in 2 years' time. I'm estimating, okay, predicting it will double my sales. This is how much materials cost. Again, how I need £100,000 to open up a second shop. Is that made up through savings, my working capital, money I have in the business already? Do I need to get a loan out? Do I need to borrow from friends and family? Do I get a grant if there is one available? Not always available. Okay. Do I bring in an investor on board? Do I bring in a business partner on board there? Okay. It's all about planning. Okay. So that is some sort of working capital. Okay, making sure that you have sufficient working capital. That is. Okay. Sales and cash receipts forecasting. So this is money coming into your business. Okay, so just take you quickly back here. Just bring up the laser pointer. Okay, money, cash, sales, receipts. Okay, money coming into your business, generated through your sales. There. Okay, we're not talking about loans, capital introduced, overdraft, capital investment. Okay, we're talking about your cash receipts. Okay, sales. Okay, from your activities. So coming back here, so you need to forecast for cash received for your invoice sales. Okay, knowing again what I said. Just coming back to it really quickly again. I'm allowing them to take control of the goods now. 2 months after 2 months, then they'll pay me. Okay, 60-day invoicing terms. Is that too long? Okay, I've got £32 at the end of February. Okay, maybe I've left it too long. 60 days isn't a good idea. I'll be 30 days. That might bring in another extra £150 in February, maybe. Okay, generally, again, not a rule of thumb exactly. Sometimes if you get in stock of suppliers, okay, they don't allow you an invoicing period. Okay, what you pay for, okay, what you buy off them, you pay for there and then. Okay, it's only a few months, maybe 6 months at least. Okay, again, not a rule of thumb, but this is generally what I saw. Okay, when I used to run a restaurant and takeaway with my family. It's only 6 months. After 6 months, if you're paying on time, if you bought a lot off them, they want to keep your business. Okay, if it's affordable to them, if it's affordable to me, they allow me to a 3-month trade period. Okay, where I take control of the goods now. In 3 months' time, then I pay them. Okay, that has its advantages, has its disadvantages. To be honest with you, okay, great. Okay, not so much money is coming out of my business, and that month, I like to think that that money is better in my pocket than it is in anybody else's pocket. However, in 3 months' time, okay, there is quite a big bill that has come. Okay, an £8,000 bill, for example, for stock, for my ingredients. Okay, again, do I have sufficient working capital? Have I generated enough? Have I accumulated enough here? So when it comes in 3 months' time or in 6 months' time, I have enough working capital to pay for it. Okay, so again, you've got to weigh up the pros and cons of it. Okay, so cash received for invoice sales. Okay, 6 days too long. Even, well, sometimes a month is too long. I will invoice every sort of 2 weeks. Okay, and in the 3rd week, hopefully they pay me there. Okay, Revise forecast in response to impact of reduced customer spend. Again, okay, come back to cash flow forecast, ups and downs of your sales. Okay, again, at the beginning, I've only predicted I could bring in sales of 335. Marketing hasn't kicked in yet. Okay, word of mouth hasn't kicked in yet. I'm predicting low. Okay, hopefully in March, sales, the marketing has kicked in. Maybe I know for a fact that in 3 months' time, in March, there's a new office opening. Okay, more customers, more clients, more office workers coming out to buy cakes off myself and there. I know for a fact in 6 months' time, okay, there is going to be a new estate that has opened up, or there is an event, okay, on next to Wembley Stadium. Okay, 6 months' time, that is a World Cup qualifier, for example. Okay, more customers, more clients. I need to predict the increase of sales, maybe. Okay, and then it goes back down again. That's exactly what you're doing. Okay, predicting ups and downs of your business there. Okay, and obviously, if your sales have been impacted, your stocks, your materials, your ingredients, you won't be making as much cakes. Therefore, you won't be selling as much there, maybe. Okay, however, that is, you've got to look at the other way as well. Again, depends on what industry that you're in. Okay. Cake ingredients, those are perishable goods. I can't leave them on the shelf for 3-4 months until they sell. Okay, so even cakes that I don't sell, that have been on the shelf for way too long, okay, I need to throw them away. So therefore, I need to, my cost on ingredients will be high throughout the year anyway. Okay? Again, all depends on what your industry is. Okay, when it comes for you to estimate your sales, cash receipts, okay, or when you're operating the business even, okay, always have dialogue with your customers, with your clients, okay. Understand them. The better you understand your clients and customers at the end of the day, the better you have that customer profile as you do your market research, the better that you can produce a product, a service to better suit their needs. Okay, it is much easier to retain a customer, retain a client, than it is to go out and get a new one, for example. Okay, that existing customer that has hopefully bought something off you, it's much easier to convince them, target them with your advertising and marketing to get them to spend more money with yourself. Only up to a certain point, that is. Okay, you will reach that maturity point where the customer has bought everything that there has to be bought off you. Okay, they're looking for a change, for example. Even though they might be happy with your business, they're looking for a change, looking for new designs. Their tastes have changed there, so they will go somewhere else. Okay, but generally, like I said, it is much easier to retain a customer than it is to go out and find a new one. Mm-hmm. So B2C customers, okay, business to customer businesses, okay, they might postpone large financial commitments, okay, or reluctant to commit to certain events that may or may not happen. Okay, business to business customers, okay, they will have to consider their own exposure to disruptions, okay, in terms of their creditors and debtors management and cash flow challenges as well. Okay, so what do we mean by those 2 points there? Okay, so let's say here again, I am a business that's offering a 60-day invoicing period. Okay, again, great for me, but no, great for them. They don't need to part with their money. Okay, maybe not so much for me. Okay, because I don't have sufficient working capital in there at the bottom. Okay. Again, weighing up the pros and cons of it. Okay, is it beneficial to me? Is it beneficial to my clients and to my customers as well? Okay, again, okay, here I might have a £7,000 cake equipment, okay, or £500 cake equipment. Okay, I've only got 3,900. Okay, I cannot afford a 4,000 purchase here. Okay, maybe I can afford it 3 months down the line. Okay, in November we have £5,000 working capital, maybe. Okay, if it doesn't affect my sales here, that is. Okay, so again, all of this you need to take into consideration. Careful planning. Okay, payment terms. Okay, always be upfront about your payment terms. Okay, what you expect from the customers and clients. Okay, so I'm offering that 60-day invoice. Okay, great, fantastic. Okay, I'm making that customer aware that they need to pay me X amount. Well, first of all, they've taken 50 cakes off me. Okay, each priced at X amount. Okay, at the end of 2 months, they need to pay me 150 pounds, for example. That 150 pounds will be paid in cash, okay, or bank transfer. Okay, so again, on this day, they receive the goods from myself. This day, they need to pay. They need to pay by cash, by credit card, by bank transfer there. Okay, so you are clear on what you have provided to them. They are clear on what they have taken off you, and when payment is due, how they need to pay you. You might even send a reminder as well. Okay, 3-day reminder, 3 days. In 3 days' time, you need to pay X amount. Okay, obviously politely sort of worded there, just to send them a reminder. Okay, and have a system in place that if they don't pay you when payment is due, okay, you need to start chasing them. Okay, obviously if it's a simple mistake, oh sorry, I haven't gotten around to it, I'll pay you tomorrow. Great, fantastic. Okay, you can live with that maybe. If it is a persistent problem, it's dragged on for 2 weeks, 3 weeks, 4 weeks, 5 weeks. Okay, then you need to adjust your approach to them. Okay, I'm no longer offering you 60 days. You need to pay me at the end of each week now, or pay me as you receive the goods. Okay, you're falling behind on your payments. You're always late. Okay, you don't actually buy that much off me anyway. Okay, so I don't mind if I, in a sense, tick you off a bit. Okay, everything within reason, I would say. Okay, consider other options to make sales. Promote slow-moving stock. Easier said than done. Okay, I have stock that can't shift. Maybe I can sell it on at a loss making a little bit. Maybe I sell it for the break-even cost. Okay, maybe I do promotional sales such as buy one get one free, buy 3 for the price of 2. Okay, I need to free up space on my shelves. Okay, I need to get ready for the winter stock. Okay, this is more evident for retailers and say, okay, I need a bit of working capital. Okay, but obviously this is planning. Okay, I don't suddenly say, oh, I need to think about my winter stock now. It takes months of planning. Okay, I will need to have generated enough cash during the spring, summer to pay for the designs of my winter wear, to pay for the shipping, to pay for the manufacturing, to pay for the advertising of my winter wear as well. Okay, and this is what you have to factor in. Okay, doesn't matter what type of business you are. Okay, so this is for sales and cash receipts forecasting. And again, forecasting, not asking you to predict the future. Okay, you are forecasting based on your skills, your experience, market research that you have done. Okay, spoken to customers, spoken to potential suppliers, spoken to manufacturers, found out about their delivery, for example, okay, shipping costs. Okay, done a customer sort of survey. Okay, spoken to friends and family, maybe. Okay, based on all of that information you've collated, okay, based on secondary research that you have got from online, okay, this is my best estimate in terms of sales, in terms of cash. Same with expenditure as well. Okay, so on this slide we have looked at sales and cash receipts forecasting, and this is for expenditure and cash payment forecasting. Okay, pretty much the opposite. Okay, this is money going out of your business instead of money coming in to your business there. Okay, you might want to, okay, when you're talking about expenditure outflows of your business, a lot of people, okay, set up their cash flow forecast so they have one column for the actuals or what they incurred, and a column next to it for the outflows. Okay, so just come back really, really quickly, just a quick example. It's not shown here, but obviously this is your estimation for your sales, for your expenditure, or sorry, income or inflows to your business, outflows for your business, what you left over. Okay, so again, depends on your comfortability with Excel, and most of these cash flow forecasts are in Excel. Okay, if you're using a bookkeeping package, they may have a feature where you can forecast. Okay, most of them do. Some of them you need to unlock it. Okay, you add in an extra column here. Okay, next to each of these months. Okay, and you're putting down in this column once you know what your actual sales are, what your actual expenditure is and what your actual working capital is there, and you compare it to the two. Okay, so as you compare your estimated and your actuals with one another, you can see how far off you are. Okay, if you weren't too far off, then great, fantastic. Your research, your skills, your experience has sort of paid off. You have pretty much predicted, okay, what you have said you're going to bring in and what your outgoings are. Then that will give you confidence to forecast as time goes on, okay, into the future. If you're wildly off, then you need to adjust your cash flow forecasting, okay? To be honest with you, multi-billion-pound corporations out there, billion-dollar corporations, even the government, US government, all governments always under-predict or over-predict certain things here, okay? Which is why, for example, extreme governments need to borrow more money, okay? They forecast for that, don't get me wrong, but sometimes they say the cash receipts we are estimating to bring in £7 billion, okay, or £12 billion in July, okay? And obviously the figures won't come out until sort of August, okay? We have predicted wrong. We only received £5 billion instead, okay? So again, everybody gets it right, everybody gets it wrong as well, okay? Again, as time goes on, okay, you'll get better at it, I would say. Okay, governments to the extreme, because obviously there's lots of things happening in the economy, okay, always ups and downs, things that are unpredictable there, okay. With a small micro venture, it will be slightly easier to predict, okay. So again, some people check their actuals compared to their budgets, okay. Review your cost forecasting, okay. Don't be afraid to say, I can't afford this £2,000 expenditure, I'll postpone it. Maybe a couple of months, maybe sort of next year. Maybe I can't take 1,500 out of the business for my personal drawings. Can I get by doing 800 per month instead? Okay. I have widely overestimated my sales. Okay. I need to bring everything down, okay, in terms of sales. Okay. In terms of my variable costs. Okay. What does my cash flow forecast look like now? Okay, so again, don't be afraid to adjust the sales. Okay, that will come down in line with your variable costs. Again, cake making business, producing less cakes. Are we buying less ingredients? Okay, again, it all depends on what business that you are. Okay, and don't be afraid to negotiate with suppliers. Okay, I know I said sort of previously it's like 6 months before they can offer you any sort of deals. Again, take control of the goods now, 6 months, then you pay for them. Okay, but shop around. Okay, some clients, some businesses, some suppliers, wholesalers, whatever they may be. Okay, if they think that you're going to buy a lot off them, okay, they can offer you those favorable terms. They can offer you 20% off your first order, then 10% for your next 2 orders, then 5% until you have to pay sort of full price there. Okay, see what you can negotiate. Okay, see if there is any sort of offer. Are you for new businesses setting up? Okay, 10% okay, off your first order for any new businesses opening up an account with us. Okay, but you have to spend a minimum of £1,000. Okay, again, there are terms and conditions, but don't be afraid to get the conversation started. What can they offer? If they can offer you something, great. If not, you move on to another supplier until you find something that is suitable for yourself there. Okay. Oh yes, what I did forget to talk about the cash flow forecast. So just coming back to it really, really quickly. Okay, when I used to do a bit of underwriting as a loan officer, okay, I stress tested the cash flow forecast. So what do I mean by stress testing? So just say, for example, you handed in this cash flow forecast as it is, okay? You wanted a loan of say 1,600, okay? Obviously, I'll have my internal scoring criteria, okay? But what I did is I stress tested the cash flow where I reduced your sales, that is, okay? Just your sales, okay? Nothing else, by at least 20% per month, okay? Just to see what your working capital is, okay? So if I did stress test this cash flow forecast, okay, I would have discovered that your cash flow here would be in negative figures, okay, in some months. And that would indicate to me that this will run into some cash flow issues. There might not be a viable business there. Okay, so again, don't fudge the numbers, be as realistic as possible. Okay, I reduced your sales by 20% each month if it's negative. Okay, therefore I might think, oh, okay, I'm a bit harsh, maybe 10%, would that do? 15%. Okay, I will look at it, I'll make an objective decision, but that's my decision to make at the end of the day. Okay, you might want to do the same thing as well. Stress test your own cash flow. Okay, so if I've reduced it myself before handing it in, okay, then I have too low working capital. Can I change some figures? Maybe I don't need £500 withdrawings. Okay, maybe I've overestimated. Okay, £200. Maybe it's only £100 per month. Okay, I've underestimated my sales. Maybe. Okay, January £335 for cakes. That's actually considered quite low. Okay, I can increase that a bit. Okay, but obviously, what is realistic? Don't just fudge the numbers to make it look a bit better. Okay. And also be reasonable about sales as well. When I used to be a sort of an underwriter, I have seen some ridiculous sales predictions. Okay, for a loan application of say £5,000. Okay, I have seen sales predictions of £1 billion. Okay, or 35 billion, or not 35, 35 million pounds, 28 million pounds in terms of sales. Okay, to be honest, if it was that easy from a £5,000 loan, okay, you'll get your friends and family involved. You wouldn't borrow from a bank, for example. You wouldn't let them earn the interest. You rather let your friends and family earn that. You borrow off them. You get it off them, for example. They'll be throwing the money at you. So you've got to be realistic about your sales as well. Okay. Sorry, so that was the cash flow. So again, identifying those cash flow gaps, those cash flow actual versus your forecasted analysis. Okay, again, having that role. Okay, you've estimated or forecasted your sales or expenditure, your working capital, adding another row or column next to it, predicting, no, not predicting, those are actual sales, those are actual expenditure, what you left over at the end of the day. Identifying if there's any gaps, okay, between suppliers, paying suppliers, and getting paid by the customers there. Okay, really, really important. You obviously review any supplier sort of terms, consider any alternative suppliers as well. Okay, once you've done your cash flow forecast, taking that step back and seeing if anything needs to be adapted, taking those actions to close that gap, getting a loan, increasing your sales a bit more, foregoing that particular expenditure, for example. Okay, don't be surprised as well. I have worked with quite a lot of people actually. Okay, that having gone through their cash flow forecast with them, provided them a bit of guidance. Okay, provided them with some suggestions on ways to improve it, and if this is realistic, if that is realistic, for example. Okay, they have actually discovered through the cash flow, I cannot take £1,000 out of the business. Okay, so for example, worked with a number of people that are employed at the moment. They're bringing in a minimum income net, that is of say £1,500 per month. Okay, that is what they need to survive on. Okay, at that £1,500, they need to pay their personal expenses, gas, water, electricity, rent, going out, pay for holidays. So they're setting up a business hoping to get a bit more money. Okay, they're hoping to get 2,500. But having gone through the cash flow forecast, they're not able to take drawings of at least 1,500. Okay, they're only able to take drawings of 800. Okay? Therefore, it doesn't suit well with their personal circumstances. Therefore, they have not set up the business because the business cannot generate enough money, okay, for him or her to take out that amount of money out of the business there. So they have forgotten about setting up a business, setting up a venture, going self-employed. They have just sort of continued sort of working for someone else there. Okay, so again, after looking at the cash flow forecast, don't be surprised if you feel, this business isn't going to be very viable, isn't going to be very feasible. I'll park it for now. In 2 years' time, in a year's time, in 6 months' time, when economic conditions are more favorable, okay, then I'll get set up. Then I'll readdress it there. Okay. So again, forecasting is very important to be able to forecast what your potential sales are, what your potential expenditure is, and then predicting. Okay. Is it worth my time? Okay, is it a viable business or not? Okay? And afterwards, seeing what you actually forecasted was right or wrong and how far you're out with it. Okay, so there we've talked about cash flow, sort of forecasting, predicting your sales, your expenditure, sort of your working capital. Okay, this is where we talk about cash flow management. Okay, so a business, a venture needs to manage the cash flow effectively. Okay, to ensure that they have enough money to pay expenses, any debts, taxes, and themselves as well. Okay, all businesses, okay, experience some level of cash flow shortage at some stage of their business operations. It could be from day one, it could be in 3 months' time, it could be in years' time, it could be 10 years sort of down the line there. Okay, so if you are experiencing cash flow issues, okay, or shortages, okay, sooner rather than later, that will diminish your ability. Sorry, excuse me. That would diminish your ability to make payments, to expand your business, to meet your financial obligations. Okay, that's why cash flow management is key. Okay, help you mitigate these risks or address potential risks. Okay, so when the time does come, you know exactly what to do. Hopefully, okay. Obviously, in order to avoid cash flow issues, okay, you need to generate enough cash. Okay, more money needs to be coming in to your business instead of out of your business. Easier said than done. Okay, in order to generate cash, I need to start selling more sales. I need to start selling more products and services. Okay, great, fantastic. Who doesn't want that? Okay, but I've got to get the clients and customers in to my store, okay, onto my website, onto my online presence to buy it off me, for example. Okay, so obviously, if you try to get more sales in, you might need to spend a bit more money on marketing and advertising, and that's outflows to your business. Okay, again, in order to finance expansion, I need to go out. I need to raise more capital to finance that advertising campaign, to finance that extra employee, to finance that marketing consultant that I'm going to be paid for. I'm going to get loans out. I'm going to start sending shares. I'm going to attract a business investor. Okay, I'm going to put some of my own savings into the business. Okay, I need to raise cash. I need to start selling more. I need to sell assets, maybe. Okay, I can't. I've got 2 6-gas cylinder gas cookers. Okay, maybe I can only do with one now because business isn't that great there. I'm not producing that many. Okay, maybe I'll get rid of one. Okay, keep my existing one, for example. Okay, so there's many ways you can go out, generate cash, raise finance. Okay, cut back on expenditure sort of where needed to manage your cash flow expectations there. Making sure that you have a sufficient and sustainable amount of money coming in and out of your business. Again, there's no point hoarding all that money, okay, if you're not spending it wisely to expand your business. Open up a second store, open up pay for a website developer, okay, to make improvements to your sort of website, for example. Okay, know when to spend the money, spend it wisely if you've got the money. So cash flow management, again, what sort of systems that you can put into place, what to take into consideration to ensure that you are managing that process well. Okay, timely manner in which money comes in and out of your business there. Okay, so timely financial reporting is very important. Okay, we're not just talking about doing your tax returns, paying your taxes on time as well, making sure that you are making your mandatory payments in terms of cash, national insurance, and so forth there. Okay, making sure that you stay on top of your paperwork, really. So back in the day when I used to do the books for the restaurant, for example, okay, I used to be really good. I used to do it every week, on a Saturday after we've done the tables and chairs, for example, okay, when we packed up everything, served the last customer, wipe down all the services, okay, clean the toilets, clean up the kitchen, wherever it may be, okay, 12 o'clock, go upstairs to the office, okay, got all the paperwork, invoices, receipts, bank statement, till rolls, and I used to do the bookkeeping for that week, okay. Got a bit too confident, got a bit too lazy, started doing every 2 weeks. Okay, that's manageable. I did at the end of the month now. Okay. Every week I used to go through, say, 50 bits of paper. At the end of the month, I'm suddenly going through 250 bits of paper. Okay, what used to take me an hour and a half into the early hours of sort of Sunday now takes me quadruple the time. And at the end of the month, I have forgotten certain things as well. It's not fresh in my mind, okay, as it was that week. Okay, so I'm spending even longer on these tasks that I'm there. Okay, so again, making sure you're producing these financial reporting. Okay, any mistakes. Okay, so for example, in that week, if I made any calculations wrong in terms of working capital, they can be addressed there and then. So I've only had 1 week's worth of mistakes to go through. Okay, at the end of the month, if I've discovered certain mistakes, I've got to go through 4 weeks of adjustments there. Okay, so again, producing these timely reports where sort of possible. Okay, monitoring it. Okay, obviously, as the points go on, we'll go through each of these points over the next sort of various slides. Manage reduction in overheads, talking about inventories, stock management, very, very important. Okay, especially if you're a retailer as well, your stock management, your inventory management is very, very important. Going through or creating a debtors list or a creditors list, for example. Okay, so debtors, people who owe you, i.e. your customers, creditors, people you owe money to. Okay, you need to keep an eye on it at the end of the day there. Okay, we'll go into a bit more detail in each of these points here. Okay, but doesn't matter if who's on your debtors list, who's on your creditors list, who owes you money, who you owe money to. Always have a good relationship with them. Okay, build up that relationship, build up that rapport. I would say, understand their needs. Okay, only by understanding them can you come to an arrangement if things do go pear-shaped, for example. Okay, again, we will talk about this as sort of time as we go through the slides here. Okay, so first of all, manage reductions in overheads. Okay, so some actions might need to be taken in order to reduce your monthly expenditure. Okay. Depending on what that expenditure is, you will need to meet statutory obligations. Okay, so for example, my business is not doing well. I'm spending a lot of money on employees at the moment. I'm just going to fire an employee. Okay, fire a full timer, make them redundant. Okay, easier said than done. You need to give them redundancy pay. Okay, you need to go through the redundancy process. Okay, you need to have conversations with them. For example, you can't just get rid of them that way. You can't just fire someone there, okay? Unless it's gross misconduct, then you've got, then you sort of can, in a sense. But if you're going through the process of redundancy, you have to follow the process, okay? So again, making those reductions, making those savings in payments in terms of your outgoings and there, okay? Prioritizing recurring debt payments, okay? Streamlining the process, okay? So what you need to do is you need to make a list of your largest outgoings, okay, from the largest to the smallest, okay, seeing if there's anything that you can do, negotiate better terms, for example, okay, see if you can cut back on any overhead. So rent could be an example of that. Not always the case. It all depends on the landlord as well, okay. So I've spoken to a number of clients before. They've managed to reduce their rent slightly, okay, because of the economic downturn, due to COVID. And back in the day, okay, so what they were paying $1,500 per month, say, but due to COVID, they had to shut down. Again, it all depends on the landlord. That is, they were able to reduce their rent by £200 per month. Okay, landlord understood. Yes, okay, you are a bricks and mortar business. You relied heavily on sort of sales there. Okay, everybody's not doing well. Okay, we've negotiated £200 until things sort of pick up again, until COVID is sort of over. Okay, sometimes you negotiate that, sometimes you can't. Okay, again, we already talked about reductions in labor costs. Okay, maybe instead of hiring a full timer, it might be cheaper to get a subcontractor in, or sometimes vice versa. Okay. Maybe it's cheaper to get an apprentice in, train them up to do certain roles, certain jobs, for example. You never do know at the end of the day. Okay? It's worth doing the maths. Okay? And all of this takes planning as well. Okay, getting making employees redundant. You need to work out, okay, is it worth it? Okay, redundancy pay. Okay, how much do they need to give out in redundancy pay and so forth. Okay, you might want to reduce other overheads such as non-essential travel, non-essential meetings. Do I really need to travel to India? Okay, do I really need to travel to Asia, to China, to the EU, for example, to talk to that manufacturer, to talk to that supplier? Can I get it done over the phone? Can we set up Zoom meetings, for example? Okay, do I really need to go travel up to Scotland there? Okay, again, you need to make the best decision. Okay, I save myself on travel, I save myself on hotels, for example. Okay, do I really need to attend that trade show, that trade event? Okay, again, you need to weigh up the pros and cons. You make the best decision there. Same as your marketing, okay, and any sort of general consumables. Okay, some people actually maintain their marketing spend. Okay, even if their sales have gone down. So, not a rule of thumb, but generally people spend at least a minimum of 10% of their sales revenue on marketing, on sales activities there, okay, regardless of how well their business is doing, okay, because hopefully over the long term, it'll work out wonders for them, okay, it becomes more profitable for them, okay. Again, during sort of COVID, when everything was out of whack, in a sense, some people still increased their sales, if not more, okay, especially for those who are bricks and mortar as well, that now suddenly had to go online. Okay, they've never done it before. They were playing catch up. They had to spend a bit more money where affordable on sale, on marketing. Okay, but I do understand that's not always the case. Okay, not everybody can spend 10% of their sales revenue on sales, on marketing activities or advertising activities. Okay, everything within reason, but sometimes you've got to spend more in order to get more. Okay, sometimes it works out, sometimes it doesn't. To be honest with you, very sort of hit and miss. Okay, but make sure you do your sort of your market research there. Okay, inventory. Okay, stock management is very key to the success of your business. Okay, especially for goods-based ventures as well. Okay, so Wilko, again, another example of this. The run up to Wilko's downfall. Okay, I actually noticed, because I used to shop a lot in Wilko, I noticed a lot of their shelves were empty when I went in. Okay, didn't have a lot of stock on these shelves that would normally be full. Okay, again, that was down to a number of reasons: supplier issues, cash flow issues. They couldn't pay suppliers. Okay, the deliveries weren't made in times, for example. Therefore, majority of the times, to the run up of Wilko's downfall, I didn't spend any money on there because I couldn't find what I needed. Okay, obviously that's not only the main reason why Wilko downfall, but it's one of the factors there. Okay, so you might want to take into consideration supply chain disruption. Okay, so again, something such as COVID, you can never sort of predict that. Okay, but when it does happen, you need to move quickly. Okay, I was using overseas supplies in Asia. When lockdown happened, everything closed down. Maybe I need to look at really quickly domestic suppliers there. Okay, I have actually planned. Okay, what happens if my supplier A goes down? Okay, there's structures. I've got suppliers B, C already written down somewhere, which I can go to them. Okay, and fill in that short-term sort of need. Over time, it will become easier to predict your stock levels. Okay, your inventory levels there. Okay, but it comes with experience. Okay. Explore alternative supply chains, agree more favorable terms, negotiate contracts a bit more. Okay, what's the worst that they can say? No. Okay, but at least you know. Okay, you can move on to the next thing. Okay, where possible and not always possible, increase your strategic stock levels. Okay, this is more for sort of retailers. Okay, as soon as they drop down a certain inventory stock, automatically, okay, they order more stock in. Okay. Again, you have to have a bit of finance behind you in order to do this. Okay, you will notice what is my best-selling stock. Okay, depending on what that is. Okay, I'll buy more of it. Okay, buy in bulk. Okay, get it for cheaper, for example. Okay, that could help with economies of scales there. Okay, so again, tell me what type of business that you are. Inventory, stock management is very sort of key there. Okay. So what time is it now? Okay, so it's 2:51 now. If it's okay, if I take that short 10-minute break here and everybody come back at 1 minute past 3, and then we'll finish off the last part of the webinar, if that's okay with everybody. Okay. Right. Cheers, everybody. Back at 1 minute past 3. Okay. Thank you. Hello, everybody, and welcome back. We're just going to go into the last part of the webinar and now maybe another half hour, again, depending how we sort of get along. Okay, so we've just spoken about inventory, about stock and management. Okay, here we're going to talk about managing a debtors list. Okay, people who owe you money. Okay, your customers. Okay, make sure this is even before you've started to trade or as you trade, and then you'll find a system that works well for yourself or a process that works well for yourself. Okay, but ideally you should have one in place already. Okay, so although I understand that's not always the case, ensuring that you've got that robust credit control function in place. Okay, sticking to it. Okay, they say now is not the time to let debtors off the hook who owe you money. Okay, cash is king nowadays. Okay, your business is just as important as anybody else's in that supply chain there. Okay, so if you use the bookkeeping packages, sort of software, if you set up Excel well, okay, you can create this list. Who owes you money? Who pays on time? Who doesn't pay on time? Okay, always identify the late payers, prioritize them first. Okay, the people that owe me the most, the people that are always late, okay, that need those extra reminders, that I need to make that bit of effort to chase them up, sending them invoices, even going down to them, last resort, going down the legal route there. Okay, obviously you want to do everything before going down that route because it can be time consuming, can be costly, and it can be incredibly stressful as well if you do sort of do that. Okay, you might want to think about incentivizing. Okay, payments for on time and early payments. Okay, so I don't know, anybody got a speeding ticket before? If you pay within 14 days, 7 days, it'll cost you £70. You appeal it, you lose, you wait over 14 days, it's £140, please. Okay, so you could do something the same, obviously to not that extreme. Okay, if you pay on time, next order 10% off. Okay, something like that, maybe. Okay, if you pay by cash, maybe 10% off your next sort of order. Okay, if they pay on time, okay, I trust you now. Okay, you've been buying off me for X amount of months, years. Okay, I'm allowing you to take control of the goods now, offer you that 30-day invoicing period instead. Okay, don't be afraid to negotiate. Okay, or talk to them about it, or if they approach you and talk about it as well. Okay, say, okay, I remember one time was in the takeaway. There was a bunch of builders outside. They were doing some sort of building works. They come in every day for the past month and they bought something off the takeaway shop. Okay, and we always had the policy of not asking clients not asking for credit. Okay, but you know they come in, they spend quite a bit. Okay, they were there for a month. We thought it'd be at least another month's worth of income that we get from them. We allowed them credit. Okay, they pay. Okay, at the end of every week. Time went on, 2 weeks, okay, and then suddenly they had finished all their work. Okay, they got up and left, and they didn't pay us the last 2 weeks there, and they stiffed us basically. Is the sort of the layman terms of saying it. Okay, so again, we learned from that day onwards. I don't care how much money that you bring in. Okay, if we're not able to track you, we do not offer sort of credit terms there. Okay, so we learn things the hard way, and sometimes you've got to learn things the hard way, I would say, but learn from that experience. So next time you know exactly what to do. So sorry, I thought I'd just share that story with yourself. Okay, so again, the customers will have their own problems, own issues, experience cash flow difficulties. Okay, work with them, see if it works out well for yourself. Most importantly, okay. Maybe you send out those invoices a bit sooner rather than data. Send out those reminders, apply email, apply text message, apply telephone. Okay. Again, okay, depending on how you want to set that up, what is acceptable to that client so that you're not chasing for payment when it's not due yet. Okay. Don't be afraid to review any contracts with customers. Okay. If they cancel, what are the terms and conditions? Okay. For example, do I take 10% deposit? Okay, do I take 20% deposit up front, for example? Okay, so again, back in the restaurant trade at the beginning, people booking out a room, 3 tables, 40 people, set out a menu. Okay, we want this, we want that. We went and bought it. At the beginning, we didn't take a deposit. Okay, we learned that the hard way. Again, people cancel sort of last minute, but hey, I've just spent X amount of money on stock. I spent money booking in people. Okay, extra waiters, for example, extra cooks, chefs for that day. Okay, so from that day onwards, 25% discount, please. Not discount, sorry, 25% sort of deposit. And if you cancel, okay, non-refundable, for example, or we say if it's not that much, pay up front. Okay, if you cancel within 48 hours, we'll give you 50% back. Okay, or you get nothing back there. Okay, again, everything in reason. Okay. Consider invoice factoring or invoice discounting to speed up cash receipts. So I would say for a large majority of people or businesses, maybe, depending on what business that you are, this might not be relevant to yourself. So invoice factoring is a type of invoice finance where you sell some or all of the business's outstanding invoices to a third party to improve cash flow and revenue. Okay, a factoring company will then pay you, okay, most of that invoice amount immediately, okay, and they collect payments afterwards. They get the full amount. Okay, so just say I have a £10,000 sort of invoice there. I'll sell it to this business for say 6,000. Okay, and that's immediate cash for me. Okay, because I can't bother chasing for it. Okay, I'll sell it to that company. That company now owns the full amount. Okay, they can hopefully chase it, get the full 10,000, and they've earned a bit of money there, for example. Okay, so again, not everybody will be doing that. Invoice discounting, again, all depends on, this is a type of invoice and finance as well, where again, invoicing, offering discounts, okay, selling your invoices there, okay, to help you with your cash. Okay, so again, these are sort of things that you can do, but again, that invoice has got to be worth a bit of money there. Okay, there's got to be a possibility of it being cashed in at the end of the day for that business to buy it off you. Okay, and it's got to be, I wouldn't say substantial in a sense, but it's got to be worth their while. That, you know, you're not going to be able to sell on a £300 invoice there. It's just not worth their time at the end of the day. So this is people that owe you money. Okay, now you need to think about people you owe money to, who you owe money to. Again, so it's exactly the same reverse of this, really, to be completely honest with you. Okay, exploring more favorable terms with your suppliers, negotiating with your creditors, payment extensions, payment plans. Okay, if you have run into difficulties, I cannot pay you £500 per month. I'll pay you £300 per month there. Okay, up until X amount there. So in that case, you're still getting some money in, but it just takes longer for you to receive the outstanding amount there. Okay, review your contracts with them. What happens if you cancel? Okay, can you delay delivery? Okay, what are the invoice terms? Okay, read them, see what it says. Okay, is there any discounts for payments on the due date? Okay, paying on time, benefiting from that discount scheme, maybe. Okay, if they have that. Okay. Contact your landlord if needed. Get those rent reductions, as I mentioned earlier. Okay, maybe you can set up a payment holiday, maybe. Okay, where you're just paying back the interest and not the principal. Maybe depends on your bank as well. Okay, again, you'll pay more over the length of that loan, of that repayment, but it'll help you in a short term there until things pick up for yourself. Okay, especially during COVID time back in the day. Okay. You might want to optimize payment runs, okay, as an overall strategy to help you protect your sort of cash flow, more automated, for example, not so much manual work. Setting up those reminders, for example, on the system, okay. Consider those short-term supplies as well if you have any major disruptions for your main supply. So again, in Asia, it's always monsoon season, okay, at certain times of the year. In America, always hurricane season at certain times of the year. Even here in Great Britain, we get flooding every now and again. Okay, again, does your manufacturers or suppliers, people you owe money to, for example, operate in those areas? Okay, see what's out there, communicate, keep those lines open. Okay, it doesn't matter who owes you money, who you owe money to. Okay, the more you understand your customers and clients, the more you can offer terms to them, keep them on board. It'll be the same for them where you are a client and customer of them as well. So again, just some things to help you sort of manage your inflows and your outflows there. Okay, so there is some support there. Okay, again, I say support as such, but things to take into consideration out there. Okay, alternative revenue streams you might look at in order to increase profitability, increase sales. Okay, making sure that you're maintaining and meeting your tax obligations. If you can't, then you need to get in contact with the right people, set up a payment scheme. Okay, assessing financing options out there, taking advantage of any government measures. Okay, that's more to do with sort of the COVID era, not so much now. Okay, and some guidance in dealing with your bank as well. Okay. So we're going to go through each of these points here. So first of all, alternative revenue streams. Okay, thinking about, can I diversify? Can I have an offshoot? Can I produce another product and service that complements my business in order to reach another set of clients and customers there? Okay, not only just that, but increasing pricing to increase your profitability, increase your profit. Ups and downs with that, pros and cons. I can increase my price. I'm getting more per unit I'm selling. However, would that put off my clients and customers? Is the product and service I am supplying, is it an easily substituted product or service? So if I increase my pricing, they can go somewhere else and get that same, more or less the same product or service somewhere else there. Okay. Again, pros and cons of each of these. Okay. Increase the number of customers. Yeah, easier said than done. Okay, how do I increase that? Marketing, sales, discounting, buy one get one free, promotions there. Okay, and increasing that range of products and services, like I said. I think Coca-Cola do this pretty well. They have classic cola, they have diet Coke, they have, I don't know, the lime Coke, they have cherry Coke, and all the other ones. For example, okay, they're just tweaking their recipe a bit. Okay. Trying to reach that extra layer of clients and sort of customers, for example. Can you do that? Okay, to increase your sort of sales. Okay, bricks and mortar. Traditionally, bricks and mortar. I don't want to go online. Okay, don't know how you do it. Okay, again during COVID, a lot of the bricks and mortar shops they were forced online. If they didn't go online, their business folded, and so they had to get online fairly quickly. Okay, nowadays, especially after COVID, your business should be online, even if you have a bricks and mortar. I'll say, okay, not always the case, but again, just to reach another set of clients and customers to increase your sales revenues and your streams as well there. Okay, so doing things sort of virtually, okay, digitally, adapting new technology, new software, video conferencing, for example, to help speed up that process, to make that sale happen a bit more. Okay, that could be of benefit to yourself. Okay. Always review your marketing activities there. See what is working, see what isn't working. Do you need to sort of tweak it, okay, to reach that extra set of potential clients and customers? Okay, so you're constantly doing market research. Okay, you have a typical customer profile now. Okay, that customer profile will develop as your business evolves. Okay, you will define that process a bit more. You will find new elements to your customers. You will find new customers in your existing sort of profile, and that will allow you to tweak your business operations there. Okay. So again, just taking into consideration additional revenue streams. Okay, we have other webinars that you can attend, marketing webinars. Please set up a one-to-one with a business advisor, and we can go over these sort of points here. Okay, making sure that you maintain and meet your tax obligations is really, really important. Okay. So we're talking about HMRC, your taxes, national insurance, okay, VAT, okay, money you owe to the sort of the government, okay. Making sure that you are preparing financial accounts on time, making sure you are making payments on time there. They will chase you for it, okay. Any taxes owed, they will chase you for it. Things can spiral out of control really, really sort of quickly there, okay. I did a webinar earlier on in the day, in the morning, talking about tax returns. The penalties for submission and for payment late submission for your tax returns, late payments for your sort of taxes there. Okay, so making sure that you're doing those all on time. Okay, the penalties incurred for not doing those two things can spiral out of control really, really quickly. Okay, if you're registered for VAT, if you're paying VAT, can't pay your VAT bills, get in contact with HMRC, work something out from, see if you can defer it a bit, postpone it a bit. Okay, lower your payments, for example. Okay, same with income tax deferral schemes as well. That was more during sort of COVID. I do have to admit, a bit more lenient. Okay, now not so much, but have that conversation with them. Okay, making sure you're paying your corporation tax on time if you are a limited company. Okay, paying those taxes on time. Okay, and time to pay arrangements there. Okay, so again, negotiating with HMRC. Okay, a payment plan that works well for them, works well for yourself. There will be interest incurred. Okay, again, seeing what sort of action they can help you with. Okay, sometimes the HMRC can be really helpful, sometimes they can be a bit heartless there, but you won't know until you ask them, get in contact with them. Okay, so making sure that you are maintaining those obligations, getting in contact with HMRC, calling them, okay, working something out with them if you can get through to them. Okay, if you can get through to them, if you can work something out with them, they can agree to an installment plan. Okay, they can agree to suspended debt collection proceedings against yourself. Okay, sending bailiffs around, high court adjustments, CCJs, all that. Okay, they can cancel penalties and interest if there's a plausible excuse, for example. Okay, so get in contact with them, get in contact with the right department, see what they say there. Okay, accessing financing options. Okay, so continue to check regularly on what you've heard, measures taken by the government, HMRC, okay, in terms of allowances, in terms of rates, changes in taxes, national insurance, for example, corporation tax. Okay, all depends on how the economy is going. It's always changing. Okay, and just before they announce these policies, okay, they in a sense leak it out to the public, leak it to the press as well. Okay, so stay on top of changes. Okay, keep in touch with your bank, your accountants, creditors, investors, and customers there. Okay, these are sort of your stakeholders in the business. Okay, internal, external. Okay, making sure you have a good rapport with them. Okay, especially with the bank, which we'll talk over in the next slide. Okay, the accountant you rely on heavily to sort of do your books, do it well, for example. Understanding who owes you money, who you owe money to is very, very important as well. Okay, monitoring any other sources of finance. So there could be some grants available out there. There could be loan opportunities out there, or just general opportunities. Keeping your eyes and ears open. Okay, your local council website is a good place to start. Okay, and anything else that you hear, okay, from other people in your trade. Okay, there's always things sort of popping up in the industry there. So again, when I was in the restaurant trade, speaking to a customer and client, so on a daily basis, I knew that weddings were coming up. I knew birthday parties were coming up, for example. I knew special occasions were coming up. Christmas dinners were coming up as well. Okay, and I sold them, in a sense, my restaurant to them. Okay, now you hear, I hear that your mum's having a 50th birthday. Look, we've got a nice little room booked with karaoke as well. Okay, give me a call. Okay, make an appointment, say my name, get a 10% sort of discount then on your booking there. Okay, again, some businesses, one time a table of 10 came in, found out they were a business, okay, open just a mile sort of down the road. For example, you get the conversation started. Okay, you're not that far away. During lunchtime we've got these set menus. Okay, come in, see how it goes. And there were regulars. Not all of them showed up all the time, but at least you had repeat business there. Okay, you find out about these things. Okay? So this is what you need to take into consideration when accessing other financial options there. We actually do a separate webinar on sort of startup funding or possible finance options out there for yourself. Please do sign up for that as well. We go into a lot more sort of details. Okay? So dealing with your bank is very, very important. Okay, thank you so much during COVID days as well. Okay, This slide was actually set up during sort of the COVID time to what to take into consideration, but it's also relevant now. Okay, so if you are approaching the bank, okay, for an extension, for a loan, whatever it may be, if you're an existing customer, okay, especially during COVID, like I said, explain how your cash flow has been impacted, good or bad. It could be a bad in the sense that COVID happened, okay, severely impacted. My cash flow has reduced by 80% because I was a bricks and mortar, okay. Or you could go to your bank and say, look, this is good. I'm financing an expansion now, okay. I need X amount of money, a bank loan, okay, or personal loan, whatever it may be, okay. I need money to expand the business, okay. That would help you with a cash flow, pay for the premises, pay for the fixtures and fittings, pay for architectural, okay. So again, could go sort of both ways, okay. Ensure that current existing lines of credit remain open and available to yourself, i.e. an overdraft maybe it's 2,500 at the moment, okay. You've been with them X amount of months, X amount of years, can we increase it to 3,000 now before I start incurring bank charges, for example, okay. Explore new options, okay. Don't be afraid to change banks, okay, if and when sort of needed, okay. It's a bit like changing your supplier for gas and electricity. Those who change every few years are likely to get a cheaper deal compared to people that just stick with one supplier, okay. Exactly the same principle there, okay. Explore new and other options where needed, okay. If you are going to the bank, okay, and your cash flow has been severely affected, go with them with examples. Tell them why, okay. Be frank with them, be honest with them there. Sometimes they'll understand. So again, during sort of COVID, social distancing, can't bring enough customers in, bricks and mortar all shut down. I'm transitioning to online presence now. I'm putting a lot of money into the website there. My cash flow has been severely affected. Can we make a pause on loan repayments? I'll just pay you the interest now, and until things pick up, they'll start paying you the rest with a bit of penalty there. Okay, so talk about those things that you're doing to mitigate that risk, okay, to overcome that issue, to overcome that problem there. So you're not only coming them with a problem, you're coming them with a problem plus a solution or possible solution, okay. Back it up with your bank statements, back it up with a cash flow, back it up with your projections there, okay. Don't just go with them sort of empty handed, okay. And again, ask, would the business have been considered viable for a loan pre-COVID sort of 19 there, okay. So again, don't be afraid to have that honest relationship, honest conversation with the bank. But in order to have that open conversation, you need to build up a rapport with them, a relationship with them as well. And that is built over time. Not so much if you're a new customer or new client, but definitely if you're an existing customer and client. Maybe you've taken finance out from them before. Maybe you bank with them every week on a certain day. Okay, you know the staff, you know the bank, for example. Okay, that bank manager, to be honest with you, they will know how much money you got in their account. Okay, if you've got quite a bit of money in there, they'll pull you aside, have a little meeting with you. Okay, good or bad. Obviously, you've got a lot of money in there. They can offer you this, they can offer you that. Not so much money, always let them behind on payments. They'll pull you aside anyway and have a little conversation with you, maybe, okay, if they're monitoring everything well. Okay, so that actually brings us to the end of the webinar now. So this is just a summary of what we've sort of gone through. I'm not going to go through it. You will get a copy of the slides here, okay. Some really, really useful links, I would say, resources, templates, for example, that you can get from the Wenta website. So if you visit the Wenta website, in the search box, type in what you need: business plan template, cash flow forecast template, profit and loss template. You can download a free copy there. So here are our contact details, number, email address, and some links to our website that you might find useful. Okay. So nice QR code here. Anybody got a QR scanner? You will get a copy of the slides. Like I said, please do give us your feedback. Let us know how we sort of got along there. You can complete an online sort of survey. Okay. So that brings us to the end of the webinar now. I'm just going to turn my screen back on, my camera back on. So hi there, everybody. Thank you for joining me this afternoon. Hopefully we've given you a bit of guidance bit of confidence to proceed forward in terms of the cash flow forecasting. There weren't any questions or any queries in the chat box, okay, not to worry. Please do organize a time to speak to a business advisor. Okay, we can go into a lot more in depth, okay, of any questions, any queries that you may have. Okay, so if there aren't any questions or any queries, thank you for joining me this afternoon. Enjoy the rest of your day. Enjoy the rest of your week. Hopefully see you soon on some of the other webinars that we're hosting. If I am hosting, give me a shout. Okay, I'll give you a little shout out. Okay, if I'm your allocated business advisor, okay, even better there, I would say. Okay, so thank you everybody. Thank you. I see some familiar names as well. Okay, thank you for your continued support. Okay, hopefully you enjoyed it. Please attend any of our other webinars. Again, I might be hosting, other colleagues might be hosting. Please do enjoy there. Okay, and also everything that was discussed in this meeting, go out, do your own research, back up what you have learned. Okay, hopefully it ties into what we have said as well. Then you make an informed decision there. Okay, so cheers everybody. Thank you very much. Cheers, George. You take care of yourself now, everybody. Okay, thank you. Bye everybody. Cheers. Bye.